All right. Hello, welcome. It is April 24th, 2026. And today, I actually have some things to say to y'all. So, first and foremost, like the video and comment below. Please comment below. This weekend, I'm going to start working on the boot camp. So, I'm going to need y'all to start commenting, ask questions. I'm going to go over everything because mainly to just build my two funded accounts, I want to do this boot camp. So on no trade days, I'm gonna show y'all what a no trade day is. I'm gonna record the trading session live. I'm not gonna live stream it, but I'm gonna record it and then post it on YouTube after. And then after that, I'm gonna post a boot camp episode, and then after that, I'm gonna post a trade recap. So I'm gonna try to have 3 uploads every day next week about something trading related. I'm really gonna turn up the content. Now, thumbnails wise, I'm gonna figure that out. I don't really know. But today's trade review, I'm gonna just walk y'all through what happened today. Today I got pretty tilted, right? I took longs, but my emotions weren't in the best state because on my Lucid account, I had ended up taking longs that presented themselves pretty early, and it was a bad trade. So I was already tilted. So this is a emotions game, right? You could have the correct read. You could take a winning trade and you can still take yourself out of it. And that's really what happened in this situation. This trade was a winning trade, no doubt about it. It would have never came for my stop loss that I set. I just did not have the greatest emotional control today. And I mean, that's okay, right? This week, there's 2 days I didn't trade at all on this account. This is a one day in about a week. I had a tilt accident, so it's it comes with the game. Now for the actual analysis, go to the hourly chart. We I didn't have a short bias. I wanted to see longs, right? The only shorts I would have taken would have been, some safe to the draw on liquidity down here. And then, I would have take profits after it started reversing. But the long setups is what I want to talk about. So we had longs on the 1 minute, right? Let me take y'all back. I'm gonna show y'all the 5 minute time frame first. So on the 5 minute at market open, we ended up pushing down price, right? We were in a choppy range and we ended up pushing price down, creating this wick and hitting these imbalances. Now this imbalance right here, all of this is a hourly gap, fair value gap that's bullish that we traded into. After that, I saw a 30-second inversion in here that I took, and after there was a news candle within this 5 minute and it wicked really hard with a lot of volatility. So I had thought news came out, Trump related. I thought something crazy came out, right? The candle right after it shot down, shot up, and it ended up slowly but surely moving to the target I had. So how this could have been avoided, even though I ended the week green, and I've been following my rules this whole week. I ended it breaking my rules. So what does that mean? It means I'm gonna stay size down for the rest of this month. This month has been pretty bad. If you're in the trading space, for the IFEG setups and just for trading in general, every strategy has months where you will not see a lot of results, right? Strategies naturally, if you trade every single day of every single month and take every single thing you see, you're gonna have losing months that are pretty close to your winning months, right? I do not take every trade and I do not trade every day. Only take setups that I deem to be B or higher, right? I don't take any inversions that invert too slow. I don't take any inversions that, I don't have any narrative behind. I'll only take trades that I have a bias for in that day. Or if the market convinces me that it wants to go a certain direction, I don't argue with it. Today was a day where this is a mistake that rookie traders make. They're not able to hold, and sometimes, even when stop loss or TP, you're still going to try to save your account or save your day from a loss because you're scared of losing, losing money. That's a natural fear we're going to have, no matter how much money it is. We're going to be scared to see numbers going up or down, and losing to us, psy- psychology wise, I'm also going to make videos on psychology, super important for trading. Psychologically, we are don't like losing. People don't like losing. A lot of people just don't like losing, and a lot of people don't know how to take losing, and they're conditioned to see losing in this horrible light, right? In trading, you cannot have this bias. You cannot hate losing in trading. To hate losing in trading is to hate trading itself. You know, it you're not gonna there's no way for you to hit a big winner without going through the shit days and losing sometimes on, A plus setups. Because the game of trading is out of all these setups I take, one day I'm gonna take a setup and price is gonna keep trending in that direction and I'm gonna have a massive winner. I never cut my winners short. The only times I take profits on trades if my trade gets reversed. Not one time this month have I taken profits too early without a reversal. And this actually, you could say this may hurt your account, but in the long run, this is what builds your accounts. This is what allows you to be able to take all these losses. Because if you're just taking profits because you're up this amount of money and you feel like, oh, I need this money, you're not a trader. You're not trading out of skill. You're not trading right. That's not how traders trade. They don't trade hoping and wishing for every trade to win and being super safe. Like some people will be like, you should take profit if you're up. But you shouldn't do that. If you have a system that is tested and proven to have massive winners that pay for your losses and some, why are you taking profits early? It's lack of trust in your system. Today, that's exactly what happened. It was lack of trust in my system. And these hiccups are going to happen no matter how good I get. It's about how you handle it, though. If I was a beginner trader, a beginner trader, they do what I did and they see price pump to their objective. They're not locking themselves out of their account. They're chasing the trade. They're going to revenge trade. And what that leads to is, okay, now you're hyper fixated on every single candle and how they print. And one down candle is going to make you want to sell because you don't have strong conviction in this trade, right? You're not going to hold it. And this also causes you to hold a loser way longer than you have to because now you're entering to a trade that you already pulled yourself out of. You already took the loss on it. You weren't able to take the mental tax for it. You need to take a break away from the charts for a day or for a few hours and come back later when your mind is clear. Because in when you're in an industry where you can do everything right and your setup can still lose, you cannot have a toxic relationship with losing. You cannot. So today's recap is less to do with price action because, to be fair, eh, you probably got chopped up today. A lot of mentors and people I follow and the people I learned how to trade from, they got break even or they were risk off today. And I traded this day with one MQ, one MMQ, right? One contract. I did not lose a lot of money today. I lost half of a normal size, right? My Top Step account is this one's in drawdown right now. So I risk, and this month has been bad too. So I'm only risking $80 a trade. Now, I'm normally willing to risk way more in a trade. My normal risk setup is I risk 200 for 600. And my back tested strategy is at the peak of my trading, when I have a nice buffer, I risk 350 and I expect to make one to fours. I target one to fours. So, and they hit, I can't say regularly, not this month, but past history with performance, they hit pretty regularly to the point to where if you're picky with my strategy, you will have a 60, 50% win percentage. On this account, I have a 50% win rate. I have a 52% win rate on this account. I pulled multiple payouts out of this account, and the times I pulled those payouts out, I've climbed out of drawdown as little as, the lowest drawdown I had on this account was 160. right? Trading is not a game of instant gratification. You're not instantly going to get all the money in the world you want. It's a slow building game. And the gains, going slow ends up being the fast way, taking things slow, being patient. I have a friend, I just found out Lucid Trading Fund lets you keep your account. It's a one-time purchase. Top Step and the predatory things about these prop firms, and the reason why all these content creators recommend not holding on to an evaluation for too long is because these firms make you pay a monthly subscription to trade with this capital. And the only reason these accounts are worth it is if you have less than, I would say, $10,000, right? Once you get 10K from a prop firm, go live, right? That's what I'm gonna do. I'm gonna set aside $10,000 and I'm going to trade a live account, and I'm also gonna trade prop firms, right? But the predatory things about these prop firms and the biggest weakness is it's the rushing, it's the fear of not passing fast enough. They put financial pressure on you. Top Step, the accounts are like $100 a month. If you're buying a Top Step account for $100 a month, I'm gonna assume that you most likely do not. And a lot of people, it's just bad finances in general. A lot of people just don't have $100 a month. Hold on. A lot of people just don't have $100 a month. And I don't recommend giving a prop firm $100 a month that you're not making money from. You know, Lucid lets you have one-time purchases on their accounts, and you can trade it for however long you want. As long as you don't go inactive for 30 days, they'll let you keep the account until you pass it. And I think this is amazing for traders because it will help you be able to understand that your winning curve has times where you're going to be down in drawdown. If you look at my equity curve, it is a steady line up with dips down. And those dips, that's the time where the real edge from trading comes in, because that's where you have to fight your brain and your mind telling you, oh, the account is basically gone. I might as well just full port this bitch. Or, oh, it doesn't matter anyway. You don't want to have these thoughts like, oh, I'm finna lose the account. All these unadded pressures is not real trading. I want all of y'all to practice real trading and to learn this shit in the most pure way, you know? So, um, I'm ranting, and I'm gonna keep this all in the video. I'm not even gonna cut this. I'm ranting, but let me do all of this shit over the weekend. I'm going to start the boot camp series, and part one is gonna be on. I'm gonna do just basic, very basic market structure. I'm also gonna mention videos that you need to watch before you watch my video, because I just think there's no point in me reteaching ICT concepts when ICT himself teaches them. Now, if y'all want me to, I'm still give a very simple explanation to the concept that I'm teaching in the boot camp, but this boot camp is not for traders who don't know anything and don't know shit, right? I expect you to at least know a little bit, and I'm gonna for sure link ICT 2022 mentorship or TJR's 8-hour video or any ICT trader that teaches this shit, right? I want you to watch them, because I just think it's disingenuous to teach another man's concepts like they're mines when they're not. But the strategy, IFEGs, that's what I'm going to be going over. Now, I did not make IFEGs, but I did not follow a mentor to learn to trade inverse fair value gaps. I was just back testing, practicing, and if you notice, after we sweep hourly highs, London Asia high, London Asia low, we inverse with a IFEG after that, and that it's a strong trade, right? I used to trade before this crazy expansion. When we're in a market that is consolidating, price will literally hit every single level from the previous day, or at least half of the levels. And that's how I trade. I would wait for the daily to get swept or an hourly level, and then I will take a trade inverse targeting sell side. Current times, if you try to do this strategy, you will be getting cooked, ate, sauteed by this fucking market. You will be cooked, super cooked. there is more than just one way to take entries, right? You do not only need to have these external liquidity points swept, because of how the market moves, it moves internal to external. You can take internal trades to external liquidity, because sometimes under normal market conditions, you would want to wait for the external liquidity to get hit first and then take a trade to the other side of the external liquidity, right? That's how normally you would want to trade. You want to trade internal, and if you want an extra good entry that's super safe, it will go external, internal, and then external to the other side. So let's say sell side gets swept first, right? Sell side being, let me show y'all. This is sell side, right? Let's say this had a massive candle flush through here, a black candle that closed and then wick. Candle closes through this wick and then we wick here again, right? And this wick is inside another imbalance. You would want to look on the 1 minute time frame, and on the 1 minute time frame, you will see a inverse fair value gap form, and that inverse will be the protected swing low for that trade. We traded into a high time frame gap. We're showing displacement in the opposite direction, and where you will put your target is where buy side is. Now, the reason I don't trade this strategy full like external anymore is because it's lower probability. The setup only has about a 40% win rate when you do that. Versus if you take a 1 to 2, 1 to 3, and you target internal liquidity as your target, or even just low, buy side or sell side, your win rate shoots up 30%, 20% added to your win rate. On top of that, you just get less stress. You don't have to hold a trade for as long, you know? It's just way simpler, way easier, right? But I can still teach y'all the other method. The other method I would say is more helpful once you scale up your account to a strong position size, because when I was trading how I traded normally with my strategy, and when we were in a consolidating market space, not an expansion market, I was super easily able to risk $200 and get 1,500 on a trade, $1,000 on a trade. That's 1 to 5s, 1 to 6s I was able to hit. 40% win rate with a 1 to 5, 1 to 6, you're literally printing money over time. It's just on prop firms, your risk of ruin is only, depending on the account size you buy, on a 50K, it's 2,000, So your risk of ruin is pretty high. If you're risking $200 and you're targeting 1 to 5s and you have a 40% win rate, you happen to go, or it was 350. I was just 350. All it takes is for you to lose 6 trades and your account's gone. And losing 6 trades in a row is pretty easy, especially, if you let it get to your mental. It's not hard to lose that many trades in a row. Not hard at all. Ask anybody that's traded, you know? Not hard at all. But it's also statistically improbable for you to, lose that many times without at least getting one winner. It's super improbable if you're doing everything correct and you're only taking A plus B rated setups. The only and I'm talking about ratings and I'm saying a lot of shit y'all probably don't understand. And how far are we into the video now? I've been talking for around probably 10 minutes now. Oh, almost 20 minutes. So this is gonna be a longer video. If you made it this far, I'm gonna cut the video short here. All right, I'm uh I'm gonna cut the video short here, and I'm gonna explain the grades and all of this shit in the next video when the boot camp comes. So be ready. I'm probably gonna upload it on Sunday or Monday. I don't know when, but stay safe, y'all. Be sure to like, subscribe, comment below if you have any questions. I'll see y'all next week.